Alright, so guys, let's do this real quick. So we're going to be doing our top-down analysis from the higher time frame to the lower time frame. So here is the 15 minutes time frame chart. So top-down analysis is simply understanding market structure. So the basic market structure we all know about is normal. For a bullish structure, we have a swing high and swing low, swing high, swing low, which is your normal higher high, higher low. Yeah. So for a bearish structure, you have a high, then a low, and a higher low, then a lower low, another lower high, yeah, and another lower low. Please don't mind my drawing. I'm not a drawing student. So this is the basic structure of the market. What we're doing in top-down analysis is to just understand these swing points. First, we understand the direction of the market. And second, we understand where we are in the direction, the place that we are, the swing areas that we are in the market. That is what we simply do in the higher time frame. Understanding the market structure. That is why we do a top-down analysis. Normally, if we get to the top, we're not going to, as retail traders, we're not going to execute our trades on the higher time frame. So we need to scale lower or refine it lower to a place that will get better entry. That is just what it is about. There is no big deal about top-down analysis. We'll have to understand whether we're in upward direction, downward direction, or particularly whether we are in a range. Whether we are in a range like this. Sorry guys, this resembles an end pattern. We have to break the end pattern. So this is a range. This is what we are determining. We are ready to determine higher time frame. Then we'll scale lower to the place that we are in currently in the market and how we can take advantage of that. So we are starting by going to the highest of the highs, which is our, I think what we should be using now is our monthly time frame. So in monthly time frame, you can see the structure. Where is this tool? I'm looking for a tool. I don't see it. Oh my god, let's just continue. So we have a structure to the down, and we have a retracement to the upside, and we have another structure to the down. Then choose this idiot. We have another structure to the down, and again we have a retracement to the upside, and we have a structure slightly to the down, just like a sweep. This is just a shift because the impulsive move didn't move so down, just like this one. We broke this last support, right? Which turns into resistance. So but in this case, we broke it, but then we trace it back like a stop hunt or something. But regardless, it is this this low is still lower than this low. So it's still confirming a downtrend to us. So you can see that from the monthly time frame perspective, market is bearish. Because of the market is bearish here doesn't mean that the moves on the lower time frames are going to be bearish. No, it doesn't mean the same thing. What this is just implying that we have established our overall monthly flow. So we are also going to go down to the lower time frames to check the immediate structure that we're going to work with. So for now we know that the downtrend is what we have in the monthly time frame. So everything we're going to be doing is either a counter trend or a medium term trend. Medium term trend is the trend that we see in a medium term time frame, like daily, the H4, while the counter trends that we're going to be seeing, which is bullish trends, are the ones that we find in our lower time frame, like 15 minutes, 10 minutes, 30 minutes. So what we just do basically here is to put our strong levels of support and strong levels of resistance. So this is going to guide us in our decision going forward, right? If you don't know how to do a top down, this is a top down here for you to learn, of course, for free, this channel. So let's go down to weekly. Weekly is the junior brother to the time frame. So from weekly time frame perspective, we are seeing of course this is a completely zoomed out chart. We've seen the exact same structure that we saw in the time frame. We see a high, a low. Okay, this is another. This is another a lower high. And here is a lower low. This is a lower high. This is a lower low here. Also, we have retracement. So clearly, the weekly time frame has shown us that market is just in a retracement from the main move. This is a retracement that we're in, a counter trend to the upside. So we know that the market is now bearish. We have established our directional bias, which is the bearish trend. So what we are looking for is actually to sell. We're looking to sell, but remember we have swing points. This is first swing point. This should be a second swing point here. This is a second swing point, but the market has invalidated that swing point and has created another swing point around here. Okay, this is the swing points that we should be working with, but we can't work with this one because we have had a recent impulse that pushed below this low, the low of this swing point, and has given us another low. So we are taking into consideration these swing points. Yeah, so these are the two swing points we know. Anything that makes market to break these points and get to this level means that we are changing direction to the upside entirely from the bigger perspective or higher time frame perspective. But for the meantime, so long as we are still here, we can go down. Doesn't mean we cannot go up. If you are going up, we are also going to be touching this trend line. You get, that is why we don't trade from the higher time frame, because market is likely going to come here and test this trend line and still go down, or it can still break this trend line and continue to the downward direction. But what we know is that whichever case, market is always right. But for us to be safe, we have to go down to the lower time frame to understand our immediate trend. So the next we are going to be looking at now is Some of you guys already know all this stuff you're saying, but you don't know how to interpret it very well to your own understanding. So look at what we have. We're going to be ignoring all the moves that have happened here in the past. We are just going to focus on the recent bias of the market. And from recent time, we've seen markets move slow downwards to this level. Yeah. So this is the last swing point you had here before this market went down. Let me show you something. You have something like this. You get, and we have a major correction. This is the only major correction we've seen so far. These other things are just a wave inside wave, wave inside wave. Not seen any major correction ever again to invalidate this correction. Right? So we've just been seeing waves inside wave, wave inside wave, wave inside wave. And it's also good. So it means that market is going to invalidate this level before we start looking for upside direction. For the meantime, we're still looking for things that's going to push this market down so that we can take advantage of the higher time frame perspective of a bearish trend. So for now, this is a daily bias showing us that the market has moved lower and it has come to correct itself here. And now it is stuck in a range of 0.08 to 0.1. Right. This is the range that we had. And this whole move are corrective moves. They are all corrective moves. But now we know that within this corrective move, there are waves. There are waves inside waves. So how do we find out? Still go down to H4 to understand that structure. So in H4, we are seeing a pure ranging market. Market is ranging in H4. But we understand that we are still in the corrective move of the lower, for the downtrend that we saw in a higher time frame. This is just as simple as anything. Right? Now we've seen in H4, we are seeing a different trend altogether. This H4 is confirming a bullish trend. Why is that? Remember, we saw this wave inside wave. We've seen the lower time frame impulses. These are the waves that we see. Since another one here. If market breaks the level, it's going to come back to retest that level. So this was the last correction we had, last major correction we had here. The market came to break it. It came and breached this level. We tested that level and we started heading higher. So this is a medium-term trend from this level. It's a medium-term trend until the market broke this level and entered into a range. Right? When the high time frame is telling us we are bearish, but H4 we got a medium-term trend. So at this point, this is where you can do a short buy. You can be expecting a buy after this level was taken out. You could be buying and buying and buying and buying. And what is your target to this level, right? Because when market reaches at this level, we are likely going to be following this higher time frame trend line, which is a sell trend line, right? So unless market breaches this level and this level, we continue buying. But when we get to this level, we also we should be taking notes of the correction, right? Now, what did market do? Market came here and swept this level, a sweep of liquidity, right? Swept this level. Before then, it swept another level, which is this level. By sweeping, I mean it didn't give a full impulsive move, just a little bit of higher high than the previous high. So it broke the trend line and went back to retest that trend line with a sweep again. So it's now confirming that there will be a medium-term change of trend, which happened here. Market goes lower. Remember, we are still looking for a way to sell these markets. So markets gave us another opportunity to become sellers, and that is what we saw in this range here. That's what we saw in this range. So market gave us another downtrend after the medium term uptrend. So we sold all onto this level, which is which is the retest of the previous high of the medium term trend. So it's also a zone in the higher time frame. We marked out this zone to guide us. This supports from the weekly time frame. So after markets, we are not actually doing anything with this zone anyway, but markets supported at this zone went up to take out the immediate lower high, which is this level, and gave us another structure to the upside, right? So this is the range that we are in, from this zone to this zone. We are all in the range, right? And we're expecting markets to break this level and go down to the lower time frame, right? So this range is very simple. At this point, market can go up and it can go down. You can take advantage of any of the sides, unless market comes and break this level here. That is when we start expecting a bullish trade, no bearish ever. And if market breaks this level again, we have to be expecting a bearish, confirming the higher time frame perspective, right? So everything we are doing is in connotation with the higher time frame. We have gotten the higher time frame, and we are also using the lower time frame to confirm the higher time frame perspective. So for this point, we can't just wait. I know 90% of the time you're supposed to wait in the market, but for this market to break this level, it's going to take weeks, if not months, or break this level, it's going to take months. So what we do is look for, just like we confirmed a change of trend, medium here, medium term change of trend. We are also going to be following this change of trend till it gets to this level, right? So we know that market has changed, has given us an impulsive, giving us a correction, impulsive correction, right? So the market is already correcting for us to move higher, and also taps into this level, which is the higher time frame correction or counter trend line. So long story short, we are expecting a buy from this level to this level. We're expecting a buy from this to this level. Sorry. We're expecting a buy from here to this level or to this level. But to play safe, we are going to be stopping or taking our profits anywhere from here, right? Usually, we are going to be taking our profits anywhere from here. So because this is a short buy, we don't trust this buy. But we are also going to take advantage of it because market has confirmed a change of structure for us, which is this. This is a structure, and this is a corrective structure to the downside. Okay, so we're expecting markets to go to this level and tap this level before it start going down. But if it breaks this level, this is where we'll confirm our all-time high, all-time buy from the higher time frame. This is a higher time frame. Remember, this is a monthly time frame trend line. We are also seeing it from this level. So we have to take advantage of it. For now, what we are going to be doing is buy, no sell. Buy to this level, no sell for the meantime. Unless this level and this level is taken out. If this level is taken out, we are going to be selling in regards to the higher time frame. If this level is hit and price goes down, we're also going to be selling from the higher time frame perspective, right? But if this level is broken to the upside, then we start changing our higher time frame bias to the upside to become bullish. So now let's go down and find our model. This is where you apply your model, your setup, any kind of model you trade with. This is where you start looking for that model. We start looking for our trade opportunity. You don't look for a trade opportunity in the higher time frame. This is where we start looking for that trade opportunity. As you can see, the market gave us a strong impulse here, which is a buy. Alright, and it's corrected to this level. Okay, and this within that wave, there are medium-term waves, right? Market is going to create a wave and it's going to test it. And here we have to apply our advanced market structure knowledge to understand what advanced market structure is. Market is going to create a low, or call it liquidity, and it's going to come and take it out and continue the direction. After taking out the transactional liquidity, is to create a structural liquidity and come back to take it out. So usually I do this without all these cool lines and markup because I'm very used to this. So now market has taken out the recent high, which is here. The recent lower high, which is here, and came to form an equal low. After this low, it formed an equal low here, which is what we call double bottom. Now, market has taken out that recent lower high and has created another structure to the upside. It has created an impulsive move. Remember, we are looking for swing points to get inside the market. So this is the swing points we are seeing now. Is a swing low, right? And this is another swing high, confirming our bullish, our short term. This is a short term bullish structure. Remember, the higher time frame is bearish, and markets run into correction, and correction is supposed to be bullish. And this is the bullish time frame we are following, right? To see our trade opportunities so that we cannot go wrong on the pattern of the market. So this is a bullish structure. Where is the last low? This is the last high here, and we are expecting market to come here and create another swing point for us to go higher, right? So anything here, we are going to ignore everything here. We ignore everything here. All the sell setup that we are seeing here might be valid, but we're not taking it because the medium term structure is bullish. Unless market comes here, if market creates a medium term bearish structure, it's advisable for us to create, but we don't know where to create it. Market is coming down here, but we don't know where to do that because this is a bullish structure. Until this thing is done, we are sitting on our hands and we are waiting for market to come here and tap into these areas. So alternatively, if you can see our model around this area, then we can take it with full chest, targeting this high. If market comes here and creates a high here, comes here, it is always going to come to take out all these internal range liquidities. These are internal range liquidities. These are liquidities. And market can also take out this low, right? Doesn't mean that direction has changed. No, it hasn't changed yet. This is the lowest point that the market can get after taking out all these liquidities. This is the lowest point it can get to confirm a change in this trend to this direction, right? For the meantime, we are bullish on this market. So what you'll be looking at is for your buy setup. You can go down to the lower time frame, or can go down to this time frame, and from this point we are seeing so another thing we're going to be doing is drawing our Fibonacci from swing low to swing high to get our premium and discounts. So market has tapped into the 50% Fibonacci range, which is also cool. But market is likely going to come and test it again or come down to here, which is in confluence with our area of interest. So let's call this our area of interest for the buy. This is our area of interest. Area of interest, we are looking for a POI, which is point of interest. We've seen one point of interest, but it is above our area of interest. A sweep of liquidity, a break, a structural liquidity, another break. Okay, of course, market has come to test it. This is our order block. So this confirmed our bias for a buy. And the next place should be around this zone. If you see an area, a point of interest into this zone, and we can do that by going down to the lower time frame or or wait for market to come down and create another point of interest inside the zone. So that this is actually how to do a top-down analysis. We've done a top-down from weekly to 45 minutes. We can go lower, but this is just how it is done. You can try it out in other pairs. It is very simple. Thank you.